Hey guys, happy new year and I hope you and your families are doing well. I'd like this video to really help you with your trading in 2025. So there's going to be two main takeaways from this video. Those two main takeaways are going to be one, stock selection, and then two, timing of entry. So I'm going to teach you what I think is really important in terms of stock selection. I'm going to take you through a couple of the stocks that I was targeting for the January 3rd session. So I'll take you through a couple of them like Astera Labs and PLTR, and then also the location of where I'm looking to target them relative to a key daily moving average being the 21-day EMA. So we're going to jump across to the market surge charts and I'm going to take you through some recent trades that I've been targeting. We've got the market surge charts loaded up there, today's video sponsor. So if you're interested in a discounted trial of market surge, then you'll find a link to that in the description and the comment section below. As I was saying in the introduction, there's two main takeaways that I'd like you to get from this video to really help you with your trading in 2025. That's going to be one, stock selection, and two, timing of entry. So we're going to start off with the timing of entry on PLTR, then we'll start broadening out in terms of stock selection, and then I'll take you through a couple of other stocks as well, so you can really dial it in terms of your stock selection and timing of entries, because I'm going to teach you about a moving average, which I think is a real sweet spot for market leading stocks. So here we go with PLTR. My entry is on Jan 3rd as it takes out the high of Jan 2nd. So on Jan 2nd, it forms what I call a shakeout demand tail. If you've been watching the channel for a while, you'll be familiar with trigger bars, shakeout demand tails, and gap down reversal bars. It's in the blueprint video, which is on the channel, all about those key candlesticks. Okay, so what you have here on Jan 2nd is a shakeout demand tail, and it undercuts this green line. Now this green line is going to be really important in terms of the second takeaway from this video, which is timing of entries. Okay, a real sweet spot moving averages. If I could only have one, on my charts, which I can have as many as I like on my charts, but if I could only have one, it would be this one, the 21-day EMA. This green line that you see here, this is the 21-day EMA. For me, it is a real sweet spot. Oftentimes the 10-day EMA, which is this pink magenta line, is too quick for the vast majority of stocks. Oftentimes the 50-day, which is this red line that you see here on the charts, okay, this here, if I point to it, this red one here, this is the 50-day simple period moving average. Oftentimes, if you're trying to dial in on those real leading stocks in the market, the 50-day is too slow. The 21-day EMA is a nice sweet spot in between the 10-day and the 50-day. It just is really, really nice when I start teaching you about these specific setups. So what happens on Jan 2nd is PLTR puts in this shakeout, okay? It shakes out underneath recent lows and it undercuts its 21-day EMA. So I'm then targeting it through the high of that shakeout demand tail, and then my stop loss, initial stop loss, is just underneath the low of that bar by a cent. Okay, so this is the setup here. So what I'm looking for is I'm looking for leading stocks. See this pull back in here? I'm looking for leading stocks to pull back to their 21-day EMA, form what I call a shakeout demand tail, so where price goes down. So if I just show you this, so intraday, okay, price goes down, let's just clear that, price goes down, shakes out, and then recovers like this. You see that? That's why it's called a shakeout demand tail. Price pulls back, it shakes out, and then reverses. So I'm then targeting it through the high, stop loss underneath the low. Okay, so the key setup that I'm teaching you here in terms of look for leading stocks around the 21-day EMA when they form these shakeouts or these gap down reversal bars. Okay, if the volume stays below the 30-bar average, that can indicate to me that there's actually not that much selling, there's not that much supply there. Now, how do you know the stock is a leading stock? Okay, now this is where we start getting into the stock selection. So I know I'm being pretty quick there in terms of the setup, but don't worry, you're gonna see some more. I'll take you through I'll take you through A Lab, I'll take you through Reddit, and maybe a couple of others will Credo as well. Credo like Frodo, and maybe a couple of others will pop up in this video as well. But in terms of the stock selection, here's a couple of key things, right? What I'm looking for is I'm looking for really, really strong stocks. So if you're familiar with where the S&P 500 and the triple Qs are traded, they've been below their 50-day moving average. Okay, they've been down here somewhere. So PLTR is showing outstanding relative strength. This is the relative strength line. Look at this line here. Okay, this is ridiculously strong. It's got an RS rating of 99. It couldn't be any higher in terms of the RS rating, and the RS line is fantastic. So I'm looking for the creme de la creme. Okay, for me, I'm trying to concentrate in what do I think are the 1, 2, 3, 4, 5, 6 kind of real leading stocks in the market. TMLs, momentum leaders, that's where I want to be. So the kind of pool of stocks that I'm fishing in is very, very narrow. Okay, I am looking for the leading stocks. I want the strongest true market leader stocks, and we'll come on to earnings, sales, after tax margins, estimates, product, products, new areas, innovating and things like that. And then also the momentum leaders. We've seen a lot of that with quantum computing recently, but staying on the stock selection, I'm looking for outstanding relative strength. Outstanding relative strength. I put such an emphasis on that. I cannot understate that enough. Such an emphasis on relative strength. Then what I'm doing is I'm looking at the earnings, I'm looking at the sales, I'm looking at the after-tax margins. Now, for me, PLTR is the leader in terms of usable, in terms of actually being able to use AI software applications. Okay, so usable AI, I think PLTR is winning that race and winning that race by quite a strong margin at the minute. So what we can see here is year over year in the most recently reported quarter, earnings are up 43%, sales are up 30%, after-tax margins are up 33.3%. We can see a continued acceleration in the after-tax margins. We can see that the sales year over year is steady, 20%, 21%, 27%, 30%. When I show you A-Lab, we'll potentially do that one next. When I show you A-Lab, it's going to be triple digits, which is even better, okay? We can see the earnings year over year, 100%, 60%, 80%, 43%, like that. The company is up here around all-time high territory, as well, a relatively new IPO in recent years. I love seeing this as well. This is the EPS estimate. So this is the annual EPS, means earnings per share. What do you see here? Well, what I see is a company going into all-time high EPS estimates. Really like this, and it's obviously in a new, innovative, disruptive area, being artificial intelligence and usable software AI as well. So if you then look at this, the company goes from losing money, okay, to making 8 cents, 13 cents, 6 cents, and now here's where the kicker comes in. Ready? 25 cents, 38 cents. 46 cents. Year-over-year estimates, the annual EPS estimate was plus 52% in 2024. This year, 2025, plus 21%. These are some of the things that I'm trying to dial in on. So if I go to another one, let's go to AppLovin, okay? So AppLovin, this is one that I was targeting as well. Now, I'm going to show you maybe 4 or 5 of these setups, and you're going to see, wow, it's basically the same thing happening. Exactly, it's the same thing happening, but then you're doing the work, or you can just follow my platform, and I'll kind of point you to the leaders and be like, these are the leading stocks right now. So if you're looking at this here, you may go, wow, this setup looks pretty much like PLTR, and then it looks like App, and then it looks like Reddit, and then it looks like Credo. Yeah, exactly. These leading stocks, they just act in such a similar manner. So what do you see with App? Well, it's got this big earnings gap up over here. So it's got this big earnings gap up. Okay. Now the entry, there you go. See the shakeout? There's that shakeout demand tail that I was talking about. Look at the strength of the close going right out on the high there. Okay, so let's put this in. I'm targeting it through the high in here, but I'm using an ORB. So I'm using an opening range breakout to better control the initial risk because of the wideness of this shakeout demand tail. So I'm targeting it through the high of that bar there. Let's go for the EPS estimates first. What do you see? The company in essence goes from losing money, making a little bit of money, to then look at this, losing 52 cents to making 98 cents. And now here's the kicker. You ready? Here's the kicker. 2024, $4.05 per share, up 313%. 2025, up 47% with the guidance being raised. This is the estimate, $5.93. Look at the acceleration. Look at the rate of change here. Ultimately, a company is driven, its share price is driven over the long time by how much it earns, its earnings power, its expectations of future earnings as well. So it's earnings and expectations of future earnings that really help propel sustained share price moves in these TML type stocks over many months and many years. So you want to be really dialed in on this. If we now look at the earnings growth, okay, look at this, plus 333%, plus 999, plus 305, plus 317% in the most recently reported quarter. So what does this mean? Well, AppLovin reported in the same quarter last year, 30 cents per share. What did they do in this quarter, the most recently reported quarter? $1.25. Company's gone from owning 30 cents per share to $1.25. That's mega. That's 317% increase year over year. Okay, if you look at the sales growth as well, it's pretty steady here. 36, 48, 44, 39. If you look at the after-tax margins, there's an acceleration. So you've got 18%, 22, 28, 36%. So now you're increasing earnings triple digits year over year. Your sales are growing at solid double digits year over year, and your after-tax margins are accelerating, and your EPS estimates going into all-time high, relatively new IPO, also involved quasi in AI as well. Big earnings gap up. Look at the volume coming through here, and then you can see it's building this little kind of Davis box around its 10-day, 21-day EMA. There's the shakeout demand tail, so the entry is right there on this part. Let me take you through another one, which is A-Lab. So relatively new IPO. You can see that the IPO is over here. There was some news here where the stock was then gapping. It then gapped on its earnings. So you can see a theme here. I like looking for stocks post earnings gap. I actually had an entry coming through here. So it's the shakeout demand tail on the 10-day EMA, then reset there. That's a nice little trigger bar if you followed the channel for a little while. But where I'm then targeting the position is here. Okay, see this? Look, 21-day EMA. See how it trades down to its 21-day EMA? There's the shakeout to Montel. So it's looking to target through the high. If you look at the EPS estimates into all-time high territory, if you look at the earnings, triple digits, 200%, 190%, 218%, 999%. If you look at the sales growth, really impressive here. Triple-digit sales growth and earnings growth, 148, 270, 619. 206. Look at the acceleration in the after-tax margins, 34, 22, 28, 35%. Can you see that I'm literally just trying to do the same thing over and over and over again? That's what trading is, okay? I'm not playing in a really big, I'm trying to dial in specifically on where are the leading stocks in the market. I want to get positioned in the leaders. I just want to be in the leaders, okay? If I take you through Reddit, okay, this one here, I was electing to go for some of the other ones, but one of my members pointed out, Su Zhang, pointed out Reddit, really good setup. Absolutely agree. Really, really good setup. What do you notice here with Reddit? Well, one, it's a relatively new IPO. So look how similar this is to A Lab that we were just going through. Look at this, relatively new IPO. Big earnings gap coming through here. Look at the volume coming through as well. Earnings on that quarter there, the most recently reported quarter, were up 420% year over year. The company last year, same quarter, lost 5 cents. This time they reported 16 cents, and their revenue on a quarterly basis, year over year, accelerated to 348 million from 205 million. So they were up 68%, and after-tax margins accelerating. Look at the gap. Okay, Reddit, really nice setup. Then there where I was targeting it, then kind of resets in here as well. But what do you see? Look at this green line. What bar is that? It's what I call a shakeout to Montel. So the setup is target it through the high. You see, it's just the same thing. EPS estimates into all-time high territory. This year, guidance has been raised. That's what that little green arrow means, and it's up 118%. It's just the same thing. Let me take you through Credo. It's one that I wasn't targeting, but it's a market-leading stock. I was a little bit busy targeting some other things, but it's the same thing, right? Look at this. There's an earnings gap up. Okay, earnings year over year are up 600%. Sales are up 64%. After-tax margins have accelerated, plus 17%. There's the earnings gap up. Huge volume coming through on it. And there is your shakeout to Montel off the 21-day EMA. Now, if you want to get really fancy on the platform I teach in Morelos, I posted a YouTube video a couple of weeks ago about intraday mean reversion logs. So then you can look to target the bounces off of key daily moving averages like the 21-day EMA. So there's the bar, really strong close, and then it's just through the high, stop either underneath the low or potentially push the stop loss up, target it with a buy stop limit order, or target it with an opening range breakout, which are all taught on the channel for free. Look at the EPS estimates into all-time high territory. A couple of years ago, companies losing money, losing 9 cents, losing 6 cents, and they make a little bit of money, right? 5 cents, 9 cents. Then here's the kicker, 47 cents, 97 cents. EPS estimates 2025 up 439%. Guidance raised 2026 up 100%. Like, look at the earnings coming, 275%, 89% for the sales, 19.4% for the after-tax margin, 233%. So, can you see what I'm looking for here? Like, this is what I'm looking for. So I'm looking for these market-leading stocks to do this. Like, this is the type of action that I want to see. These are the ones I target. These are the ones that I want to try and get positioned in. So to give you a key takeaway, and another thing here as well, look at the gap for PLTR on the earnings as well. So I really like big gaps on the earnings. I think when it's these market leading stocks, it gives you an indication of what the market, of what the institutions are doing with these stocks. So I really like big earnings gaps, and then looking for that first setup around the 21-day EMA. So a couple of key takeaways there is, one, stock selection. Focus on those market leading stocks. If you want a really good book to read, read the William O'Neill book, How to Make Money in Stocks, to learn all about earnings, learn all about sales, learn all about margins. So the CAM Slim methodology, learn about earnings, learn about sales, learn about EPS estimates, learn about new products and revolutionary technologies. Okay, and then in terms of the setup, as I said earlier on in the video, my favorite moving average to look for setups, 21-day EMA. That for me is a real sweet spot with these market leading stocks, your PLTRs, your Reddits, your A Labs, your Credos, your AppLovins of the world. 21-day EMA, real sweet spot. So these are the type of setups that I absolutely love to target. Hopefully that video helps you with your trading in 2025. Thank you for all the support on the YouTube channel. It is much appreciated, and as always, I look forward to seeing you in a future video.